traders, welcome back, and in today's video we're going to be discussing probably one of the most important concepts or ideas when it comes to trading psychology and trading success, which is all about breaking out the boom and bust cycle. And Mark Douglas really formalized this in the trading space, but the whole idea of boom and bust is a very popular concept in economics. It's this whole idea of doing really well and then doing really poorly afterwards. And it is not difficult to see that majority of traders are stuck in this cycle of doing very well, making profit, and in some cases doing incredibly well, making, high 5 figures, 6 figures profit in a month's time, for example, in a very short period of time, and then the next month giving it all back to the market, blowing it all. And if you want to have consistent profitability as a trader, you have to understand the concepts and the ideas I'm going to share in this lecture. And there's no point doing incredibly well as a trader if you cannot sustain it. And the best traders I know out there aren't the ones who make 6 figures in 1 month. They're the traders who are consistently extracting money from the market. And there are things you can do as a trader. There are principles and ideas you can hold dear to yourself, both psychological principles and very technical principles that you can do to increase the probability of staying out the boom and bust cycle, breaking out of it first and foremost, and then staying out of it and consistently extracting money from the market so you can be a full-time trader or you can be a trader for your job. But it's important to understand that breaking out the boom and bust cycle is a state of mind. And thinking that you're going to be able to pull money out the market every day, every week is kind of unrealistic. It doesn't really work like that. But how it does work for majority of traders, right? There's always cases where there are traders doing, pulling money out the market every day, every week. But when I speak on the YouTube, I have to speak to more of a general audience. And what I'm going to say is for majority of people, breaking out the boom and bust cycle first and foremost starts with a shift in psychology and recognizing that if you just think longer term, and if you think in terms of every 3 months or every year, and you give your trading results permission to play out over 3 months, over a year, then it's very realistic to break out the boom and bust cycle just with that shift in mentality and shift in psychology. But it's also about implementing the 4 or so principles I'm going to share in this particular video, and recognizing that if you don't understand these and if you don't implement them in your trading, you're going to be stuck in the boom and bust cycle. You're going to do very, very well, and then guess what? You're going to give it all back the next month. Okay, but there are things you can do, which I'm going to share in this video, very practical things you can do to break out the boom and bust cycle and achieve consistent profitability. And by the way, if you like the new look, if you like the new backdrop, give this video a like, subscribe, all the good stuff, share it with your friends, and let's get these videos out there, because this is a very important concept to understand as a trader. Breaking out of the boom and bust cycle, specifically the one Mark Douglas talked about in Trading in the Zone, also a general boom and bust cycle as discussed in economics, in general economics, the same principles can be applied. Okay, so the big problem here is traders are stuck in a cycle, a very frustrating cycle at that. Most traders make profit and then lose them the next month or the next week or the next day. And how often have you seen this thought process or this idea or this scenario thrown out by a trader? Oh, I did really, really well. I made $50,000, I made $100,000, and then I lost it the next week. I lost it the next month. Okay, I'm not interested in that. I'm not interested in traders who make $1 million just out of nowhere, because guess what? In majority of cases, they're going to lose that money just as quickly, if not quicker, than what they made it. I'm interested in traders who know how to sustainably extract money from the market. That's really the difficult thing to do as a trader. It's not difficult to make money as a trader. It's difficult to consistently extract money from the market when the market presents the opportunity. That's difficult because it takes a level, as we're going to discuss in this video, it takes a level of self-regulation and self-mastery that very few traders, very few human beings ever achieve. But I know a few of them. I know a few of my clients I've worked with for many years that have got into that stage doing very, very well consistently because they know how to self-regulate. Okay, I've also got some traders in Telos Capital that are very consistent. Okay, anyway, so most traders make profit and then lose it. They're constantly stuck in a cycle of winning and then losing. And guess what? That cycle is incredibly exhausting, right? I know throughout my journey, especially early on in that journey, I was making quite, especially when I picked up that first round of investment, I was making quite a bit of money, you know, taking 5-figure profit trades, and then low 5-figure profit trades, and then losing it, you know, the next month. And it's exhausting because you get extremely elated and extremely happy about making that money, which is exhausting in of itself. And then it's extremely exhausting and depressing when you lose that money the next month because the loss of that infatuation, right? And it's almost a little bit like this in the psychology. You're extremely elated about making it, you're extremely proud about making it, and simultaneously as that pride goes up, you fear losing it because you fear losing what you're proud of and what you're infatuated with, and then eventually you do lose it, and that's extremely exhausting as well. So that whole cycle of winning and losing is extremely exhausting as a trader. And I've been through that myself, and the moment I see it in clients, I point it out because it's an example of amateur thinking. When I was going through that, I was naive to a lot of things, right? Until I learned how to self-regulate and learned it was possible to self-regulate, okay? So they're constantly stuck in a cycle of winning and then losing. This means at the end of the year, they've got nothing to show for. They've worked so hard throughout the whole year. Every month, every week, they've been doing their processes and they're extremely elated after winning. And then at the end of the year, they've got nothing to show for because they've lost it all, because they haven't learned to self-regulate. They haven't learned self-mastery. This is because majority of traders do not know what I'm about to show you in this video. And those that do, a very small proportion, a very small percentage of those traders actually implement what I'm going to show you. And I'm very confident in saying what I'm about to say in this video. They're universal principles, and if you implement them, if you know them and you implement them, you're going to do very well, okay? So what is it first and foremost? What is the boom bust cycle? Well, everybody knows the boom bust cycle is doing really well followed by doing very poorly. But more specifically in the psychology, what is the boom bust cycle? What I've identified in my own journey, observing myself as a trader throughout the last 7 years, observing my clients, observing traders who are doing way better than me, and being able to work with very successful traders and observing their psychology and observing what they do differently to traders that don't do very well, is that the boom and bust cycle is only there when you don't know how to self-regulate. The boom and bust cycle is the market taking you for a ride when you don't know how to manage the market yourself. So let's elaborate on this a little bit more. The boom and bust cycle occurs in traders that do not know how to manage themselves. The boom and bust cycle is a symptom of the market running the trader. It's not the trader running the market. So the traders that don't know how to manage themselves and regulate themselves, they need to be managed by the market. Okay, I hope that makes sense. So it gives you the idea that if you learn to manage yourself and you learn to self-regulate, then you can break out the boom and bust cycle. And it's not necessarily difficult to do, you just need to know how to do it. So more specifically, the cycle starts when a trader takes a win. This is what I've observed. This is the most common scenario for a boom and bust cycle. When the trader takes a win or they get a funded account, they do something what they label very good and they're very proud of and they're very infatuated with, and they go into a state of pride. That's where the boom bust cycle starts. Because what happens? The moment the trader goes into a state of pride, they think they know better than the market. They think now that they're invincible, and they think that they're, God's gift to the world. And guess what happens? They push themselves into a state of pride, self-exaggeration, and now they project what they think is going to happen onto the market. They're no longer listening to the market because they have this feeling of invincibility. They think they're in a position to be able to tell the market what's going to happen next. And they project their ideas onto the market. They project their shitty trades. They're no longer listening to the trading plan. They don't need their trading plan anymore. They think in their mind, and they start projecting their shitty low quality setups onto the market. Because the market's never wrong, they get humbled by the market. So think about that. That state of pride of puffing yourself up is the boom, and then projecting low quality setups into the market and getting humbled by the market is the bust. And the cycle repeats, okay? Because now they start going on to the bust scenario, where now they're in a state of shame. They've gone from a pride to a shame, and now they're too fearful to act in the market. And when the market presents an opportunity, they don't execute on that opportunity. So they keep pushing themselves into such a state of shame because now they keep missing great opportunities, and they're, all right, and because they're now fearful to act in the market. So they go from a pride, greed, pride, I'm proud of myself, I'm greedy, I'm projecting into the market, I want more from the market, to a state of shame, fear, I'm fearful to execute in the market. Okay, this happens sometimes in a period of a day, even sometimes less, and you can oscillate. This is why I believe trading can be so difficult. It's because if you don't know how to manage yourself, you're going to swing left and right, pride and shame, fear and greed, positive and negative, and you're going to burn yourself out because you don't know how to manage the polarities. Okay, this is why I think psychology becomes such a crucial component of trading. Anyway, so what's happening is now the trader's in such a deep state of shame, and guess what happens when you get challenged so much? When the external world challenges you an enormous amount, you start to stick up for yourself, and you start to say, you know what, Pat, I deserve better, right? I'm going to start only taking the highest quality setups in my trading plan, and I'm not going to worry about these low, crappy trades. I'm just going to stick to what I know, and I know very well. And guess what? You know, step by step, you start taking higher quality setups, and you start doing a little bit better, and you start taking a win. Great, and I took a win because I'm sticking to high priority setups in my trading plan. Take another win, and then you start to get ahead of yourself, and you go into that state of pride again because you don't know how to self-regulate, and the cycle repeats itself. That's what the boom and bust cycle is. So understand the boom and bust cycle is a reflection of an amateur thought process of going into pride when you win and going into shame when you lose. Hope you understand that the boom and bust cycle is a reflection of a poor psychology, and a psychology that you have full control over. So hint, hint, this is what we're going to cover in the video. If you learn to manage yourself, you don't have to be managed by the market. You don't have to be run by the external world, because you learn to manage yourself and self-regulate. So, a little misconception. Mark Douglas talked about in his Trading in the Zone book that the boom and bust cycle is a reflection of your psychology, and he said that it's only a psychology problem, challenge. And I would agree with him, but you have to understand this. This is a huge misconception. Although the boom and bust cycle is a psychological challenge, and that if you have a successful edge and you're stuck in the boom and bust cycle, it can be fixed by fixing your mindset. You have to understand, you want to make sure you're not using the boom and bust cycle as an excuse to cover up a non-profitable strategy. I see this a lot. I see a lot of traders say, I'm in the boom and bust cycle, but then when we strip it down, they don't really have an edge there. They're just trying to cover up the fact they don't have a proven edge and trying to blame it on their psychology, trying to blame it on the boom and bust cycle, okay, where in actual fact, they don't have an edge in the first place. So you need to make sure the first thing you do is you go back and you make sure you truly have a profitable strategy that you're trading. This is why I don't think that mindset and psychology is everything in trading. It's everything in trading after you know you have a proven edge. If you have a proven edge, truly have a proven edge, and you're not consistent with it, the issue is the psychology. But you also don't want to use, this whole idea of I'm stuck in the boom and bust cycle to override the fact that you don't even have a proven strategy in the first place. Okay, I'm going hard on this in the YouTube videos because I'm seeing it a little bit in my 12-week program and my one-on-one coaching students. We're going back to the fact that one, they may not even have a proven strategy. Two, they may not even have that proven strategy in a clear trading plan, mechanical trading plan yet. So we need to go back to those two steps first before we can start building the proper psychology on top of. So step one is finding a profitable edge that is stable. Because when you do, you increase the probability and increase the chances of having a stable psychology and breaking out the boom and bust cycle. Okay, so do this. I want you to do this step by step in order to break out the boom and bust cycle. Step number one, find your edge. Make sure it's profitable. Make sure it's your edge and it aligns with your lifestyle, it aligns with your personality and your risk management, your risk tolerances. For example, if you're working a 9-to-5 job and you have to be at work at 9 in the morning and you live in London, for example, don't be trading a highly active scalping strategy that requires you to be active all morning for the London session because it just doesn't work with your lifestyle. Okay? Put your edge into a mechanical trading plan. So once you've clearly identified your edge, make sure you can put it on a piece of paper or a Notion document so that you have your rules written down and you can go in there and replicate it. Because there's no point having an edge if you're not going to come to the market every time and execute on that edge consistently. Because even if you have an edge and you're not consistently executing that edge, you don't have an edge, you're still a gambler. So once you have an edge, your whole job becomes about how can I come to the market and replicate this every single time. The best way I've seen being able to do that consistently is by having a clear mechanical trading plan that outlays that edge, which gives you the best chances of actually coming to the market and executing that edge. Now, once you have those two things, then we can start talking about mindset and psychology. Because now it becomes about managing your expectations prior to a trade. This is where the Bulletproof Your Mindset tool that I've created, it's completely free, link in the description or in the first comment, is so crucial. Because now once you have an edge, you need to make sure that every time you come to the market, there's as little variance in your psychology as possible. Meaning that every time you come to the market, if you have an expectation of what you think the outcome is going to be, then you're going to be driven by an outcome-based thought process and you're going to be pulled away from your trading plan. You're going to be run by fear and greed. So you need to utilize the Bulletproof Your Mindset tool to ensure that your expectations are kept in check so that you're actually sticking to your trading plan. And then after every trade, you need to learn to neutralize pride and shame. Because remember, if you go into a state of pride after you win, you're then more likely to go away from your trading plan thinking you know better, projecting low quality setups into the market, which is also going to lead you getting humbled. And you're going to be stuck in the boom bust cycle. Because those that don't know how to self-regulate are run externally by the market. Or if you go into take a loss and you go into a state of shame, you're then going to be run by fear on your next position. You're not going to take a trade because you're too fearful to act. So after every single trade, you need to learn how to neutralize the pride and shame, which is what I teach in the 12-week program. Week 5, you need to learn how to neutralize the pride and shame so that every single time after you take a trade, you can blank slate and you go back to your trading plan. Instead of being proud after a win or in shame after a loss, you self-regulate, you get back to a state of equilibrium, you listen to the market, and then you're clearly seeing the market for what it is. You're not above or below the market. And then when the market presents an opportunity again, you just execute according to your trading plan. And that's where consistent profitability comes in, because now you have an edge and now you've learned to manage your psychology and self-regulate so you can consistently execute on that edge. And it's the consistent execution of your edge that leads to consistent profitability. So these are the 4 steps in order to break out the boom bust cycle and achieve consistent profitability. Find your edge, put into a mechanical trading plan, manage your expectations before every trade, and manage your psychology after every trade to neutralize pride and shame. Go back to your trading plan, and it becomes a game of consistently executing your plan time in, time again. That's what's going to yield consistent profitability. Okay? So traders, I hope you found this useful. If you did, please like, comment, subscribe, share the video with those you know will find it useful. We have a completely brand new email series. It's the Trading Mindset Domination email series. It's a powerful name. I encourage you to check it out. It's completely free. And every day or every second day or every third day, I'm going to be showing up in your email inbox, giving you highly actionable insights and tools you can implement then and there to level up your trading psychology. It's not something you want to miss. The link is again in the description or in the first comment. So go in there and sign up to that. So you're going to get more and more value from me in order to ensure that everything you want to achieve in your trading and your life comes true. Because a lot of the times, truth be told, it's the fact that we're standing in our own way. We know what we need to do. We just need to get out our own way. So if you're interested, check out that email series. It's going to be very useful. And I'll see you all in the next video. Cheers.